Hello friends, so in this video we are going to see the journal entry for Procure to Pay P2P journal entries. So in the Procure to Pay or accounts payable cycle, journal entries required, and what journal entry is required we will see in this video. So the first thing is purchase requisition. Purchase requisition is a document which is issued to the purchase department for buying the raw materials. So for this any journal entry is required. So answer is no. Purchase requisition journal entry is not required. Next is purchase order. So for purchase order any journal entry is required? No. We will create some internal documents but we will not post any journal entries. Next, vendor selection. So while selecting the vendor in the market, do we need to pass any journal entry? The answer is no. Vendor shipment. If vendor is shipping or sending the goods via road or any other mode of transportation, do we need to pass the journal entry? The answer is no. Next is vendor shipment is done. Next is goods received. So if we receive the goods, do we need to pass the entry, any journal entry? The answer is yes, we need to pass the journal entry. And what will be the journal entry? Goods or inventory or purchase account debit and GRIR account credit. What is GRIR account? So GRIR account is a temporary account which is created when only the goods is received and invoice is not received. Next is GRIR account. Uh, if we receive the if if we receive the invoice first, but we did not receive the goods, then what will be the journal entry? Debit GRIR account, credit accounts payable account, or vendor account. When we receive the goods, what will be the journal entry? When we receive the goods, so the journal entry will be GRIR account debit to accounts payable account. So when we receive the goods, we credited the GRIR account. When we received the invoice, we debited the GRIR account. So GRIR account first it is credit, now it is debit. So it got set up, it got closed, nullified. So our entry became the purchase accounts debit to accounts payable accounts payable. Okay, next. So next process will be in P2P cycle, three-way match or two-way match. So to match the invoices like purchase order, receipt notes, and invoices, do we need to need to post any journal entry? The answer is no. Two-way match, no need to post any journal entry. Payment to vendor. Suppose we are making the payment to vendor. Do we need to pass the entry? Yes. Answer is yes. So what will be the entry? Accounts payable account debit to bank clearing account. Debit accounts payable credit debit accounts payable credit bank clearing accounts. So here bank clearing is a temporary accounts. I will give you one example for bank clearing account. Suppose in your company you are maintaining the one bank for purchase, whatever the purchase you will do, you will make the payment through particular bank A. Whatever the sale you will do, you will receive the income in particular bank account, name is B bank account. So, and one bank you will clear, one bank you will keep, okay, for general purpose. So, temporarily you will maintain the debt balance. That is called bank clearing account. If you are receiving the payment or you are making the payment, you will make the payment through bank clearing account. Then bank from the bank clearing account, you will transfer to the particular, if it is purchase payment, you will transfer to A account, and if it is sales receipt, payment receipt, you will post in bank B. So that is the reason bank clearing account will credit it. Then we will debit the bank clearing account and credit the bank account which is created particular for purchase. Okay, next journal entry is P2P journal entry or accounts payable journal entry, purchase of raw material. So purchase of raw material, what will be the journal entry? Purchase account debit to accounts payable account. Then next journal entry is purchase of fixed assets. Suppose you have purchase of fixed assets. What will be the journal entry? Fixed assets account debit to accounts payable account credit. Payment of invoice. When you make payment of invoice, you will post the journal entry accounts payable account debit to bank account. Next journal entry we have included for goods receipt also. When you receive the goods, you will post the journal entry inventory accounts debit, purchase or inventory or purchase accounts debit, credit GRIR account, that is temporary accounts. When you receive the invoice, GRIR account credit to accounts payable account or vendor account. When you make the payment to the vendor, when you make the payment to the vendor, you will pass the journal entry accounts payable account debit to bank clearing account. Okay, fine. So next journal entry is next journal entry is next journal entry purchase return. What will be the journal entry of purchase return? So purchase return journal entry will be accounts payable account debit to purchase return account credit. Accounts payable account debit credit purchase return. Discount received on early payment. What will be the journal entry on discount received on early payment? So accounts payable account debit to bank account to discount received account. To bank account to discount received account. Debit accounts payable account, credit bank account or credit discount received account. Journal entry for accrued expenses booked. So what will be the journal entry? So the first journal entry will be debit expenses account, debit expenses account, credit accrued expenses or expenses payable account or outstanding expenses. Credit accrued expenses. When the outstanding expenses paid, payment of outstanding expenses. outstanding expenses account debit, outstanding expense, accrued expenses or outstanding expenses account debit to bank account credit, cash or bank account credit, debit accrued expenses, credit, debit accrued expenses, credit bank account or cash account. Next journal entry is accrued expenses. Accrued expenses incurred but not paid. When expenses incurred, debit expenses account. Example, utility expenses account debit, credit accrued expenses or expenses outstanding account credit. Next entry is when expenses paid. Example, this is the example when accrued expenses paid. When accrued expenses paid, what will be the journal entry? Debit accrued expenses account, credit bank account. Next journal entry, prepaid expenses. Prepaid expenses. So what will be the journal entry for prepaid expenses? When the payment made, when made the prepaid expenses. Prepaid expenses account debit to bank account credit. Debit prepaid expenses, credit bank account. When the prepaid expenses becomes your expenses. When the prepaid expenses become your expenses, what will be the journal entry? Expenses account debit to prepaid expenses account credit. For example, prepaid salary account debit to bank account credit. When your prepaid salary become expenses, salary account debit to prepaid salary account credit. Next is accrued revenue. Accrued revenue, revenue earned but not received. So what will be the journal entry? Accrued revenue account debit to revenue account credit. When you earn the revenue, when you earn the title of revenue but did not receive the payment. So the journal entry accrued revenue account debit, credit revenue account. When you receive the revenue, the journal entry will be bank account debit and credit accrued revenue account. Okay. Next journal entry is deferred revenue, unearned revenue, deferred revenue. What is deferred revenue? We received the payment but we did not give the goods and service. So when we receive the advance payment, what will be the journal entry? So the journal entry will be bank account debit to unearned revenue account. Bank account debit to unearned revenue account. Where this revenue is earned, so our entry will be unearned revenue account debit, credit revenue account. On revenue account debit, credit revenue account. Next, depreciation. Next is depreciation of tangible assets and amortization of intangible assets. Depreciation is the expenses of tangible assets. Amortization is the expenses of intangible assets. What will be the journal entry of depreciation? depreciation account debit to accumulated depreciation account or assets account. What will be the journal entry for amortization? Amortization expenses account debit, accumulated amortization assets account. Amortization expenses debit, accumulated expenses, accumulated amortization is credit. Or we can tell the intangible assets. Okay, next is right of non-collectible account, bad debt account. Right of non-collectible account. So what will be the journal entry for bad debt? So the first entry will be bad debt account debit to bad debt accounts debit to account receivable account or debtor accounts credit. Account receivable account. We are making the provision on bad debts. What will be the journal entry? Bad debt account debit, credit provision for bad debt. Then provision for bad debt account debit and credit will be the account receivable or debtors account. If provision is not made, then directly we can charge the bad debt against the account receivable account. If provision is maintained, then first we will create the provision, then that provision we will charge against the account receivable or debtors account. Okay, next, interest expenses. So what will be the journal entry for interest expenses? Interest expenses account debit to account payable account. Interest expenses account debit to interest payable account or interest or accounts payable account. When we make the payment of interest, the entry will be interest payable account debit to bank account. Interest payable account debit to bank account. Similarly, interest income. What is interest income? If we have made any investment and we are getting the interest on the investment, it will become our interest income. So what will be the journal entry? Debit interest receivable account, credit income account, interest income account, interest income or income account, interest income journal entry. I will repeat: interest receivable account debit to interest income account. When we actually receive the interest amount, our entry will be bank account debit to interest receivable account credit. Bank account debit credit interest receivable account. Okay, next journal entry is inventory purchase account. Journal entry of inventory purchase. So first entry will be inventory account debit to accounts payable account when we purchase. Inventory account debit credit accounts payable account when we make the payment of inventory purchase. Journal entry will be accounts payable account debit credit bank account. Accounts payable account debit credit bank account. Sale of inventory. What will be the journal entry? Account receivable account debit to sale account or revenue revenue account. When we receive the revenue, bank account debit, credit, account receivable account. Okay, next is what is the journal entry for goods purchased on credit or goods sold on credit? What will be the journal entry on goods purchased on credit? Purchase account debit to accounts payable account. What is the journal entry for goods sold on credit? Account receivable account debit to sale account. Okay, next question is inventory write down. Loss of inventory. Inventory write down account. Journal entry for inventory write down. Inventory lost. Inventory lost or write down journal entry. So the entry will be inventory expensive account debit or inventory write down expensive account debit created purchase account. Next journal entry is on loan received journal entry. Loan received journal entry. What will be the journal entry for loan received? So the first journal entry will be loan receipt journal entry will be bank account debit to loan payable account. Loan payable account credit. Bank account debit. Bank account debit credit loan payable account. And what will be the journal entry on loan payment? So the journal entry will be debit loan payable account, debit interest expenses account, credit bank account. Okay. Next, what will be the journal entry for loan payment? Journal entry is done. Purchase of fixed assets. What will be the journal entry of purchase of fixed assets? So the first journal entry of purchase will be assets account debit to bank account or accounts payable account. Assets account debit to accounts payable account or bank account. If it is cash purchase, assets account debit to bank account credit. If it is credit purchase, assets account debit, accounts payable account credit. Okay, next journal entry. Dividend declare and paid journal entry. What will be the journal entry for dividend declare and paid? When company declare the dividends, so debit will be dividend expensive account debit, credit will be dividends payable accounts credit. When we make the payment of dividend, dividend payable account debit, credit bank account or cash account. Next journal entry is cost of goods sold. Next entry is cost of goods sold. So debit cost of goods sold account, credit purchase accounts or inventory account. Next entry is payroll entry. Next entry is payroll entry. So what will be the journal entry? Debit payroll expenses account, credit wages payable account. Okay. Next journal entry is sales tax journal entry. Sales tax journal entry. Debit sale. Okay. Next entry sales tax. So the journal entry will be bank account debit when we make the sales, debit bank account, credit sales account, credit sales tax payable account. What will be the journal entry on purchase with tax? What will be the journal entry of purchase with tax? So purchase account debit, input tax account, input tax account debit, and credit bank account. Sales tax, output tax. Output tax minus input tax is tax payable. Next journal entry is income tax payable entry. What will be the entry on income tax payable? Income tax payment. So debit income tax expense, income tax account, debit credit bank account. Income tax account of debit credit bank account. Okay, what is the entry for forex gain and loss? So the journal entry on the forex gain and loss is debit foreign exchange loss account, credit foreign exchange gain account. Foreign exchange loss debit and foreign exchange gain credit. When you have loss, suppose I will give the example here. You purchase the goods, you purchase the goods of 100 rupees, you purchase the goods of $100, purchase the goods of $100. I will give here one example. Purchase $100, purchase $100 at the rate 80 rupees, 85 rupees, 85 rupees per dollar. When you make payment, when you make payment of $100, when you make payment of $100, rate was rupees 80 per 80 per dollar. So here so here per rupees $5 is less. So you will find the difference in the amount. So whatever the difference will come, that is your forex loss account. So that forex loss will be debit. Purchase account debit, forex loss account debit to bank account credit. Journal entry will be. So journal entry when you making the payment, suppose out accounts payable accounts payable account debit, loss loss forex loss account debit, FOREX forex loss account, forex loss account debit, credit will be your bank account credit. Okay. Next entry cash withdrawn by owner for his personal use and goods withdrawn for his personal use. Cash withdrawn is, so the cash withdrawn is nothing but the capital withdrawn. So what will be the journal entry? Drawing account debit and credit will be your cash account. Drawing account debit, credit will be your cash account. When owner withdraw the goods for his personal use, so the entry will be drawing account debit to purchase accounts credit. Drawing account debit to purchase accounts credit. Okay, what is the next journal entry? So the next journal entry is goods destroyed by fire. Goods destroyed by fire. So what will be the journal entry? Goods destroyed by fire. It is a loss, so it will be debit. Good destroyed by fire account debit to purchase account or inventory account. Good destroyed by fire account debit to purchase accounts or inventory account. Next journal entry, good destroyed by fire, but insurance company admitted 50% loss. What will be the journal entry? Good destroyed by fire account debit, bank account debit, bank or cash account debit, bank or insurance claim account debit, credit purchase accounts. Okay, I think that's all for the journal entries. So friends, if you think any journal entries is missing in accounts payable process or procure to pay process, please comment the journal entries so that we include all those entries which is used or recorded or passed in accounts payable or procure to pay process that will help for the unexperienced persons or not when they find all the journal entries in single videos in all the process in the single videos. So we are working on it to include all the journal entries in same videos. So please tell us the journal entries so that the next time we will include the journal entries which are the missing journal entries. So I hope you have find this video helpful for your procure to pay process, journal entries, and accounts payable journal entries. Thank you. Keep watching, keep supporting. Okay, bye.